Welcome to our latest insights into the cryptocurrency market. Today, we're focusing on Bitcoin as it heads toward a crucial golden cross.
Absolutely. This signal has historically led to massive rallies, and with inflation numbers dropping, could we see Bitcoin surge?
We've got top experts sharing their thoughts, including Neuner, on major shifts in crypto portfolios.
And let's not miss Benjamin Cowen's insights on the Consumer Price Index report and its implications for Bitcoin.
Trust in our AI-generated summary as we distill these complex topics into essential insights you won't want to miss.
Exactly. Our AI frameworks help you navigate the fast-paced world of finance efficiently.
Stay tuned as we break down what could be ahead for Bitcoin and how you can prepare for potential market movements. As we navigate through the cryptocurrency currents, let's dive right into why Bitcoin is poised to make significant moves very soon. Buckle up, because a golden cross is upon us.
Exactly. This golden cross on the Bitcoin 2-month chart historically signals massive rallies. What led to this recent setup? Buckle in for some pivotal news.
What do we mean by golden cross exactly?
In layman's terms, it's where the shorter-term moving average crosses above the longer-term moving average, suggesting bullish momentum ahead. And guess what? This trend has happened before and typically precedes a major rally.
Tell us about those previous golden crosses.
From 2012 to 2020, every time that golden cross appeared, Bitcoin skyrocketed. Historical patterns are painting a vivid picture of bullish outcomes.
And how about the recent news regarding regulation?
The UK is stepping up by recognizing cryptocurrencies legally as personal property. This is a huge fundamental shift that can lead to increasing investor confidence.
Can we talk about the institutional angle?
Absolutely. Recent Bitcoin exchange-traded fund inflows show institutional investors are back in play. They're setting the stage for future rallies.
Now, what are the predictions for Bitcoin moving forward?
All indicators indicate that a bullish rally is on the horizon post-Golden Cross. It's time to hold on tight.
What about the regulatory landscape? Any long-term impacts?
Definitely. The regulatory scene is still in flux, and upcoming developments could dramatically shift market sentiment. Keep a close watch.
So to sum it all up, what can we expect moving forward?
With the Golden Cross and favorable market conditions, historical trends suggest a bullish rally on the horizon. Let's keep our eyes on the charts.
What do you think could change this momentum?
Share your predictions in the comments. Viewer opinions can greatly impact the conversation as we watch these markets unfold.
Navigating the currents of today's Bitcoin market, we've got an intriguing question on deck. Is Bitcoin's consolidation finally nearing its end?
That's right. Tung dives into the market's latest movements and what they could mean for Bitcoin's future. Get ready for a deep analysis of inflation rates, tech stocks, and all things crypto.
So what's the core thesis behind today's discussion?
The main idea is that Bitcoin is set to rise as economic indicators like inflation decrease, suggesting an impending breakout after a lengthy period of consolidation.
Let's explore those key points, starting with market reactions. What can you tell us?
This morning's market was like a roller coaster. Bitcoin dipped briefly before recovering, showcasing the wild nature of trading and the influence of tech stocks like Nvidia on crypto sentiment.
How does the drop in inflation play into all of this?
It's a game changer. With inflation falling, the Federal Reserve is more likely to cut rates, which could inject liquidity back into the market, positively affecting Bitcoin's price.
What about the influence of exchange-traded funds on Bitcoin's supply?
The demand from Bitcoin ETFs is a crucial factor. This year, more Bitcoin is flowing into these funds than is being mined, creating a supply shortage that could push prices much higher.
What are the predictions for the market in the coming weeks?
The outlook is bullish. If everything continues along this path, tech stock boosts paired with an impending rate cut suggest we could be on the brink of a significant bull run.
Could ETFs play an even bigger role moving forward?
Absolutely. As Bitcoin's price starts to rise, we can expect a surge in ETF popularity, which in turn will fuel further growth within the crypto space, attracting more traditional investors.
Let's wrap things up. What should we take away from today's insights?
The takeaway is clear. Bitcoin's consolidation may soon be ending, with key indicators suggesting a bullish future. Investors should keep a close watch. Exciting times ahead.
Any final thoughts on Bitcoin's future?
Stay tuned. The upcoming rate cuts and economic conditions are vital markers. Could we be gearing up for an exciting ride?
And lastly, what about crypto regulations?
As always, regulatory discussions will play a pivotal role in shaping Bitcoin's trajectory. Let's see how this unfolds.
Buckle up as we dive into the whirlwind changes in the crypto portfolio, ignited by intriguing inflation numbers.
Indeed, Rand Neuner discusses the surprising inflation figures which have left the market relatively unfazed, but there's so much more behind his major portfolio adjustments.
So what's the crux of the matter? What's causing this nonchalant attitude from the markets regarding the consumer price index data?
Rand reveals that while the CPI inflation dropped to 2.5%, what's really affecting the crypto scene is a different chart entirely. Trump's election odds.
Let's dive into those CPI numbers. What do they mean for the market?
While CPI shows positive improvement, it's become somewhat irrelevant to the crypto world, as investors have their eyes elsewhere.
What did Rand change in his portfolio?
He strategically moved from Bitcoin to MicroStrategy, viewing it as a leveraged bet on Bitcoin's future. And that's just the start.
Trump's odds. How can political betting affect crypto prices?
Indeed, it appears that Bitcoin is currently more influenced by Trump's election trajectory than by economic fundamentals.
Now, what future scenarios might unfold from all of this?
Radical shifts could happen post-election, with Rand suggesting a bullish trend if Trump emerges victorious.
What's the deal with interest rates? How might they influence crypto?
If the Federal Reserve cuts rates, it may trigger a bullish wave across the board for crypto investments. Definitely something to keep your eyes on.
In summary, what are the significant takeaways from Rand's insights?
It's all about adaptability. With changing political climates and market conditions, strategic adjustments like Rand's could be the way forward for many investors.
There's a storm brewing in the economic waters, and our next insightful summary navigates the latest CPI report and its implications for Bitcoin.
Absolutely. This analysis dives into the inflation report, what it reveals, and how it's steering the ship for cryptocurrencies like Bitcoin.
So, what's the core message from this CPI report?
The central thesis is that inflation has dropped to 2.59%. This could signify shifting economic currents, but it raises questions about the Fed's timing in rate cuts. Could we be on the verge of repeating historical inflation patterns?
Let's break down these inflation numbers. What's the impact?
Right now, we sit at 2.59%, a critical threshold, especially with the Fed contemplating rate cuts based on this. But are we comparing apples to oranges with the 1970s?
And what about the Fed's expected moves in interest rates?
The markets are leaning heavily towards a 25 basis point cut. Yet, the rise in core inflation could temper the Fed's efforts to act too swiftly.
Now, how does this play out for Bitcoin?
Bitcoin seems to be absorbing the liquidity flow from these market trends. However, uncertainty remains regarding how an imminent rate cut could shift its price dramatically.
So looking ahead, what should we remember?
Previous trends show us that inflation cycles can repeat, particularly influenced by labor market stability. A soft landing could signal lower inflation going forward.
What does the future hold for inflation based on these trends?
We're likely to see continued inflation challenges unless policy shifts are carefully managed. The distinction between headline and core rates will be vital to watch.
Any thoughts on how Bitcoin will react to Fed actions?
Absolutely. Bitcoin could respond significantly to liquidity shifts that may follow Fed actions. Traders need to watch closely how price movements react to any rate cut decisions.
So in summary, what's the big takeaway here?
The key is careful navigation through rising inflation, potential Fed moves, and how they could impact Bitcoin. Staying informed and strategic is more crucial than ever.
Will we see a shift in the economic recovery based on this analysis?
Indeed. The interplay between inflation and monetary policy will dictate the path of recovery. It's a landscape that businesses must watch closely.
As we wrap up, what should viewers focus on next?
Tracking upcoming inflation reports and Fed meetings will be critical. These will provide clues on what's next in economic policy and market movement.
Time to navigate the currents of today's discussion. Bitcoin's price just took a hit, down from $58,000 to $56,600 today.
Indeed, it's fascinating how the recent debate between Kamala Harris and Trump influenced investor sentiment. Let's get straight to the facts surrounding this situation.
So what drove Bitcoin to plummet? Can it really be just a debate performance?
Absolutely. The analysis suggests that as Kamala projected confidence, Bitcoin saw a dip. Market sentiment can shift dramatically based on political occurrences.
What are the key takeaways regarding the debate's influence on Bitcoin?
Right, Bitcoin's price historically reacts to political climates, and this debate was no exception. As candidates debate, investor sentiment fluctuates dramatically.
Looking at regulations, how is this shaping the future of crypto?
Regulatory attitudes can greatly alter market dynamics. Trump's push for government efficiency could favor crypto, whereas Kamala may present challenges.
What did Elon Musk say that's relevant here?
Musk argues for less interference from the government, highlighting that innovation gets bogged down by bureaucracy. This aligns with crypto's need for flexibility.
Now, what are the predictions moving forward after this volatile moment?
As tensions ease, Bitcoin could find a footing again, but each election moment will draw market reactions.
And how might the election impact future regulations?
If Kamala prevails, we might face stricter regulations, which could affect how crypto assets are traded and used.
To summarize, what are the major takeaways here?
Political climate has a direct correlation to Bitcoin's movement, and upcoming electoral outcomes will indeed affect the regulatory approach.
Seriously, what do you think this election means for the future of cryptocurrency? Join the discussion.
We'll keep tracking these developments closely. The intersection of politics and crypto is only beginning.
As we wrap up our analysis, it's clear our guests highlighted some promising signals for Bitcoin's future.
Absolutely. Rand Neuner's insights on the Golden Cross and George Tung's expectations for a breakout paint a hopeful picture.
And don't forget Benjamin Cowen's analysis of how lower inflation rates may affect Bitcoin prices positively.
Ivan on tech emphasized regulatory shifts, reinforcing how they could attract more institutional investment.
It's interesting to see their differing opinions on timelines and regulation effects, isn't it?
Indeed, it shows that while there's optimism, perspectives vary on the potential catalysts and pitfalls ahead.
Thank you for tuning in. If you found valuable insights in today's discussion, don't forget to hit that like button and subscribe for more content.
Join us next time as we delve deeper into cryptocurrency trends. You won't want to miss it.
Until then, keep your investments smart and your knowledge sharp.